All right, so this is the last section of the chapter 5.4. It's kind of a longer section, so we'll go through, as fast as we can here. We're going to introduce a new account called petty cash. We're also going to have a new account called petty cash short and over. We're going to establish a petty cash fund. We're going to fill out a petty cash slip, every petty cash report, and a journal entry for replenishing petty cash. So this is all about petty cash. So what is petty cash first? Petty cash is an asset that has a normal balance. It increases on the debit side, just like you've seen this kind of T account with the normal balance debit increase and the credit decrease. So petty cash is an asset. The amount kept on hand is a small amount for petty cash. So it says the amount of cash kept on hand used for making small payments is called petty cash. A lot of times it's a small amount, $100, $200, depending on the account of the company. It says here it's just made, the idea is that it's to be done and pay small amounts where writing a check and making a formal document and journal entry is not needed. Mel Delgado says to set a limit for $20. Anything under $20 can be paid out of the petty cash fund. We still have to keep track of the petty cash fund, and we want to make sure there's checks and balances for it, so the person in charge of petty cash doesn't just get the money and take it. But what we do with petty cash is you pay postage, you pay like a delivery cost, you pay buy small miscellaneous things, and you write it down and you record it later at the end of the month. So to start out a petty cash fund, you have to take cash out of your regular fund, which is why you have a credit here for cash. You will use the account title now, petty cash, which is an asset, and you're just basically moving cash out of the fund and putting it like you set up. And this is the journal entry to establish a petty cash fund. So we're setting up the petty cash fund with a $100 debit to petty cash, which is an asset, and we're taking the $100 out of cash. Seems kind of weird, but the idea is, again, we're not going to be writing cash checks, but we do want to take that cash out and put it in the petty cash because we want to keep track of it. So the $100 credit to cash and the debit to petty cash. And we established it with writing a check on the 19th. So it says establish a petty cash fund for $100. Okay. They usually put it in like a lockbox, and the accounting manager or the business manager or one of the head secretary bookkeepers would keep track of it and pay it out and keep track of the slips. So this is the entry to establish petty cash. Pretty straightforward. We're debiting the new asset petty cash and crediting cash. Making payments with petty cash fund with a petty cash slip. This is a petty cash slip. So when we make payments, it'll be approved by a certain person. The person in charge will be the person that'll write this. And so small business sole proprietor might be you as the owner. Like I said, the accounting manager, business manager, lead secretary, bookkeeper, whoever that person might be. This is just a form. This petty cash slip is just a form to prove any payment was made. So it has the number of the petty cash, the date, who we paid, what for, the amount, the account that it'll come on, miscellaneous advertising, repair, those types of things. Miscellaneous advertising are often used. And then who's approved by. This is just telling you what we just talked about there. Petty cash slips are kept in the petty cash box until the fund is replenished. No entries need to be made for these minor payments. We will do it all at the end of the month or when the petty cash fund gets below a certain amount. So this is, we're going to have to fill out a petty cash slip. Has these items that you see listed. Petty cash slip, date, who it is, reason, the amount, which account is supposed to record, the signature, who approved it. So we have a petty cash fund established with the journal entry, and then we have petty cash slips paid and kept in a petty cash box until we need to record all of them. Here they do talk about an accounting clerk and some of these things based from the petty cash fund. Accounting clerk is just a worker who processes routine details about accounting transactions They might be somebody who's in charge of all the bills, accounts payable, or somebody in charge of all the accounts receivable or payroll. We had Deb Boston was our payroll person forever at Urbandale, in charge of all your checks, all your taxes, all those things. Very important role in the business. Depending on how big it is, it could be a one or two person job or multiple people. They also might be somebody who takes payments, like we talked about with accounts payable, vendors, keeping track of account balances, verifying hours, wages for payroll, verifying computer generated reports, things like that. So, accounting clerk is something you might see on a study guide later. So, here's the petty cash report. We established a petty cash fund on January 19th. Now we're getting to the point now where it's the end of the month. Okay. It says eventually the petty cash fund must be replenished and cash payments must be recorded. Delgado sets up a system where the amount of cash on hand, once it's reduced to $25 or lower, they will replenish the petty cash fund. But it's also replenished at the end of the month. Another thing you see in the study guide. The reason we do that is that all the expenses that were paid out during the month in those petty cash slips, we want to record them into a journal entry, which we'll do in a second. Before petty cash is replenished, though, we must prove that this fund equals and it's complete. A lot of times you'll have different dollar amounts and change, and you might have, it might vary somewhat for whatever number of reasons, exact change, people don't bring it back, certain whatever the case may be. And so for our purposes as accountants, we want to make sure all the money, even though it's a small amount, we need to keep track of this. And so sometimes there'll be errors, difference between actual cash on hand and recorded amount of cash that should be on hand. We are going to keep track of this, and we might say there should be $45 in the fund, but there's really 44. And so then we got to decide, even though it's a buck, we're going to decide where we messed up on that. It's kind of like when people take care of their drawers and cash registers at the end of the day. They want to make sure their drawer equals. So we do this at the end of the month or whenever the amount is reduced to a certain number, which Delgado is setting up as 25. So in order to do this, if it doesn't equal, we're going to have the petty cash could be cash short, or the petty cash could be seen as cash over. Petty cash on hand amount that is less than the recorded is called short. So in my example, if the petty cash on hand is supposed to be 45, but we only have 44, we are less, we are short. Whereas the petty cash on hand amount is more than the recorded amount. So let's say we recorded 45, but we really have 46. It would be cash over. So we need to understand that. We'll kind of expand on that in a minute. So here's the petty cash report. You have the name of the custodian, the person in charge, and our sole proprietorship. It's just Michael. The date. And we list from the petty cash slips. If you remember, there was a spot on what the account was, advertising expense. So we go through and we list the two slips here at the end of the month. So this was set up January 19th before, so now we're on the 31st. We have a miscellaneous expense and advertising expense. They're listed here under fund total payments. We have the beginning fund total. We add up the payments, list them here, and we put it in the replenish amount column straight across. The amount 100 minus 34 is 66 is the recorded amount on hand. They will give us in our instructions the actual amount on hand. In this case, they are giving you, we only have $65 on hand. We have recorded $34 worth of payments, and we have recorded that we should have $66 in there, but we only have 65. We're off $1. So we need to record this. And so what we talked about was cash short and over. So cash short is listed first, and then over is listed second in parentheses. Often cash short is the example that we will get, although in mastery problems and things, they might give you a cash over. Usually cash short is more frequently occurs. Cash short is listed on the left, so it'll be a debit later on. Cash short or cash over is listed on the right, so it'll be a credit later on. I'll show you that. But since we think we're supposed to be $66 in there, but in our lockbox where we have this money, we can count it up, and we only have 65, we subtract, and we are short $1. So we thought we were going to have to replenish only $34 worth of payments, the $20.14 we paid out. But since we are short, we are going to have to pay out that one extra dollar, so we will have to pay out 35. This amount to replenish plus the actual amount equals the total of the fund. So the list of expenses is here. Transfer that amount over. We subtract from our original total fund number to get the recorded amount on hand. They will give us the actual amount in your directions, and if it's not equal, if it's 0, then we just will replenish 34. But since it's not equal, and we actually are short a dollar from 66 to 65, we need to add that dollar to get the amount to replenish. As you see down here, this is the 1 through 8 steps. It shows you how do we find the recorded amount on hand, the fact that it's actually a dollar short, so we need to add that dollar into what we are now replenishing. So it kind of talks about what we just showed you there. So this is filling out a petty cash report. Now when we replenish petty cash, so this is the same report that we just showed you, but now we're going to replenish petty cash by making our journal entry. Okay, so let's talk about this journal, this entry called cash short and over. We are starting a new account that's going to be called cash short and over. It's going to be considered an operating expense. And so an expense has a normal debit balance, as you can see. So you have a normal balance of a debit, and a credit would be lowering cash short and over. So operating expense, debit balance for cash short and over. Cash short and over is debited when cash is short and credited when cash is over. Short's listed first, it'll be a debit. Over will be listed second, it'll be a credit. Cash short and over balance can either be a debit or a credit. When you guys were doing earlier things, we'd always have sales as a credit. We'd always have cash as a debit. You always knew the normal balance. Well, here, cash short and over could be either a debit or a credit. The balance is usually a debit because petty cash is usually more likely to be short than over. Short is listed first, it's a debit. Over is listed on the right of short and over. So over is a credit. That's kind of how we always remembered it. Looking at our petty cash report, again, we have two slips that we needed, that we qualified as miscellaneous expense and advertising expense. We need to journalize these. These are small payments that we made that we just used the petty cash, but we want to record it at the end of the month whenever we replenish it. We're replenishing it on the end of the month there. So we put the 31st as the date, and it says here it's check number 11. And so it tells us paid cash, replenish petty cash, $35. So you know the credit, the cash is $35. You also know that because on the petty cash report, it tells us that here. But in our transaction, it tells us paid cash, replenish petty cash fund, $35. And then we just will list whatever they are in the order that they're listed in our journal transaction here. So miscellaneous goes first. Doesn't matter if it's higher or lower. Just they list it first, so we're putting miscellaneous expense debit, advertising expense debit, and since we were cash short, again, cash short is a debit. Since we were short $1, we want to record that in cash short. These three debits equal the cash credit, 35. If we were over, it would have been $1 put over here, and this amount would have been subtracted with the parentheses of over, and it'd be $33 at replenish. But since it's short, cash short is on the debit side, so you put the cash short amount there, add those three numbers up, they should equal. That is replenishing petty cash. I'll show you enough of the T accounts here. It says even though petty cash fund usually contains only a small amount of cash, it is important to understand good controls to guard over proper use of that petty cash fund. The balance of the account is always going to be the original amount of the fund when we replenish petty cash. The check issued to replenish petty cash is a credit to cash, but does not affect the petty cash amount. So when we put petty cash amount, when we started, it was 100. So that's always, well, you always want to get back to that replenishing number at the beginning of each month. Whenever we replenish, we want to get back to the starting amount. Kind of talks about it here. The amount in petty cash before the fund is replenished, 65. Amount of the check issued to replenish it, 35. The amount in the petty cash box after the fund is replenished back to its original amount. And again, it talks about it here. Okay, so cash debit or cash short and over will be a debit when it's short, listed first, and it'll be a credit over when it's listed second. If it's over amount on a petty cash report, it'll be in parentheses because it'll be a negative number, and we'll go from 34. If it was over, it'd be in parentheses here, it'd be 33. That's all she wrote for the notes.